We know, we can see that the market is strong. And on a day like this, what I like to do, let me get my drawing tool here. On a day like this, my preference is like, oh, we're trending higher. Great. If we can get a pullback to the 21, we do the setup as discussed in the Saturday class. So, we sell the spread and then we're off and running, and that's great. The market today is so strong, and look, this is rare, that it can't even get through this 15-minute, this is the 5 period, all that kind of stuff. So it happens. And so the question now is kind of like, okay, is there something we can do into the close? And so the cardinal sin into the close is that you do a big trade, it doesn't work, and you lose the profits that you made in the morning. Okay, so part of this, it's not about making sure that we catch everything. It's making sure it's cash management. Okay, so this part is, as I'm looking at this, the idea that we could hold 3,700 into the close, which, it's below that 5 EMA, it's actually below here, and it's a nice round number. It makes a lot of sense. So what would happen if we just said, okay, let's just sell the 3,700 put credit spread, right, for today's expiration? So now we want to look at that from a risk to reward scenario. Yeah, and look, the toughest thing in trading is watching it move without you, right? But remember, we're changing our mindset. We want it's a business. It's cash management. We've got a specific way to do that now. So if we look here, so if we look at this, we could say like, okay, well, let's sell the 3,700 3690 put credit spread. And you'll notice here that's only 70 cents. Okay, that is unacceptable. We'd be risking $9, $920 to make that $70. So that is absolutely unacceptable. So then, let me see. Gosh, what a strong market. So now we're seeing some short covering. So then the question is like, okay, well, geez, where could we get to? We're at 3720. We've got an hour left. And then this is where butterflies can get interesting, where it's like, okay, well, what happens if we get all the way to 3750? Is that something that's possible here? But what's a cheap way to do it? Well, we could do a $5 wide butterfly here for 20 cents. If we wouldn't have widened that a bit, 3740, 3760, give us a little bit more room to work with here, for 60 cents. And remember when I was, I did 5 lots earlier, so I could stick with that. And then I'd say like, okay, well, let's just say this goes to 0, right? If this goes to 0, how much am I risking? Oh, come on, toss. All right, so let's say I could get it for 80. Good God, look at what's happening here. Okay, so if it goes to 0, I'd lose 400 bucks, right? And so it's like, but I could make 4,600. So now let's just, again, we want to get into the cash management portion, because I want to assume, because these are going to be a little trickier to manage, we want to kind of assume that it's going to go to 0. I'll talk more about that in a second. Okay, so $170 against 1,800 bucks if we pin. All right, I can deal with that. So let's see if we could get it for, about 80 cents here. And then we'll talk about the methodology behind this. Okay. So now, if you've never done a butterfly before, don't worry. You don't need to. It's just, again, I just want to kind of show you an example here. Copy. So let me post this. Okay. As we head into the last hour, we have a very strong market. I'm going now. I want to switch to cheap trades where if I'm wrong, I lose a little, and certainly not more than I made already in the day. And if I'm right, I can make more than I made already. For this trade, before I did 5 contracts. On this one, I'm doing 2 contracts, so that my max loss is only about 20% of what I already made in case this goes to 0. Okay, so this is a way basically to, look, if this goes to 0, okay, and if you get it now, you can get it even cheaper. If it goes to 0, it's not like I want that to happen, but I'm not stressed about it. Okay, so earlier it was like, okay, we got the spread. When we get to 40% max, we got to get out of it. This is kind of like it's a I wouldn't call it a Hail Mary pass, because we do have, this market has got some remarkable things happening here. And overhead resistance, when we're looking at the moving averages and stuff like that, we certainly could get there, but this is a low risk way to do it. Okay, the other thing we could do here is yeah, so well, we're looking at the upper band here, which is 3750, so that's our target. So my preferred method of, let me see, where are we here? Because remember, I've got 6 screens, but I can only share 1. So my preferred method here, my preferred trade would have been, we come down to the 21, we get buy zones, and we sell put credit spreads. Okay, we never got that. But if you look at the 8 EMA here on the daily chart, because remember, these key moving averages here are targets. The 8 EMA is 3748. Okay, basically 3750. Don't know if we're going to get there, but if we do, I want it to be a cheap play without a lot of risk. Like I said, we could sell the $3,700 put credit spread, but in that case, if for some reason we puke into the close, in that case, we were risking 9 to make 1, and that is inexcusable. Yeah, no, the butterfly is basically, you kind of just let it cash settle. That's one of the benefits of SPX. Or, if you get, you get closer to the close, you could get out at $4 or $5. That's fine. The nice thing about the SPX, though, is that you can let it cash settle. So this is a tricky part of trading. I do think that we're going to just keep rolling here into the close. So it's like, oh my gosh, what should we buy? What should we buy? But you don't want to get carried away, because if you suddenly start taking a big risk based on euphoria, yeah, we could end up falling into the close, right? And if you bought a bunch of call options, those call options will evaporate. Okay, they will evaporate. So that's the kind of stuff that we want to look at there. Why not sell a call credit spread when we've got some? Because we do not take trades between 11:30 and 1:30, because that during that time is chop. So no trades during that time. So I wish, again, in a perfect world, and of course the market doesn't care what we want. In a perfect world, what would have happened is we would just kind of would have chopped down to 3680, that 21 EMA, and then we would have gotten some buy signals against the 21 EMA, just like we did here against the 8 EMA, and we would have sold some put credit spreads there. That would have been great. That's a typical trade, by the way. That's normally what would happen on a trend day. It's just that today we're up 2%. This does not happen very much. Yeah, so if you're a more advanced trader, you want to do an unbalanced fly or anything like that, absolutely feel free. If you've never done a butterfly before, it's what you do on this for a butterfly. And again, it's one of those, it's kind of you assume it's going to go to 0. That's the only way to do this. You just go buy a butterfly, and if it doesn't work, and then you just, you set the strikes, and if it doesn't work, I'm going to lose $150. I mean, I'm not going to really dig into too much of my profit that's already booked today. So I can live with that. If it does work, and let's say we close at 3750, I'll make like $1,800 or whatever the amount is. So, you typically it's either going to be 0 or, we got to get moving here, right? And at some point, if you wanted to, like, it doesn't look like it's going to work and you want to get out of it, you can. But the point is, it's a small trade where the max risk isn't that big a deal. but it's a potential for a 20x return if we happen to pin at 37.50. The odds of it happening are low, but the risk to reward is attractive. Yeah, it's well, a lot of times with butterflies too, it's there's different ways to do them and different ways to structure them. Unbalanced flies are nice because you could do it for a credit. Um, we could probably do an unbalanced fly here, but that's, honestly, that kind of stuff is really just more for, you want to become kind of an expert in unbalanced flies first. There's classes and stuff like that for it. But this isn't, so to be honest, this is not a core part of my trading. I would say 85% of my profits easy come from doing credit spreads. So I want to emphasize here that this is that cherry on top. It's the cherry on top, but it ain't the driver. Okay. Now, that all being said, what else could we possibly do here? Okay, so one thing here, in that you just pointed out, we are a long ways away from this. So the idea of setting up a call credit spread also makes sense. But here's the thing, okay? I don't do a lot of spreads towards the end of the day because of why. So why would I not want to do, like the trades that we did this morning? What's a reason you could think of why I wouldn't want to do it in the afternoon? Yeah, because if we're wrong, we're going to get absolutely murdered. I can't emphasize how fast we would get killed on this trade if we're wrong. Meaning that if we sold the at the money call credit spread and this thing just ripped ass against us, this morning when it went against us by like 15 points, we were down $1. If that happened this afternoon, we would be down $5 easy. Okay, we would get absolutely murdered. So the bulk of the money I want to make is I want to make it before 11:30 Central doing credit spreads, because it's then when it's safe. Does that make sense? So that's the reason, is like toward this part of the day, is that in the morning when we're doing spreads, when we're wrong, it's fine. What is happening here? I've got something. Oh, there we go. In the morning when we're doing spreads, when we're wrong, it's fine. In the afternoon, you might as well do a directional trade. So you might as well short the S&Ps here, because it's about the same as selling a call credit spread. Because if you're wrong, you're going to get murdered quickly. And we're not looking to get murdered quickly. If we're going to get, we want to be able to slowly, be able to ease out of something that's not working. So that's what we want to look at too. So in a situation like this, the challenge for a trader is that there's always going to be something to do. And what I want you to consider is, I don't want you to focus on the things that you could do that could make the most money. Focus on the things that you could do that if they didn't work would kick your ass. Okay, and right now, shorting futures and selling a call credit spread look attractive, but if they don't work and we race up to 37.50, they will destroy us, and they will actually make our accounts go red for the day, which is unacceptable. There is absolutely no reason to take that much risk. So the last hour, I just kind of look at it as, it's really more the first part of the day. That's more about what I would simply call natural order flow. The last hour is about hedging, market makers, and market manipulation. And so why would you want to risk a lot of money in that situation? All right, so that's the idea there. Now, at some point here, there may be an opportunity. So now, will I do credit spreads into the close? I will, and it just kind of depends. If we're at, say, 36.9, okay, so where would I do a credit spread today? If we were to fall to, say, 36.90, right, back to the 21 EMA, and you got 3,700 right here, I would sell the $3,700 put and buy the 36.95, because it would probably be about a 350 credit, meaning I'd only be risking $1.50. And if it didn't work, I'd be fine risking $1.50. And if it did work, I'd make $3.50. Okay, that's a lot different than doing something that's, does that make sense? So there is that, so part of this trading is, look, I love, if this was 11 o'clock in the morning and we saw this action, this is like, yeah, let's sell some call credit spreads, right? But a lot of this is time of the day, and truly, the goal on something like this is, you're looking at 1 to 5% NLV a day. The goal is to make it before 11:30, and then after that, you can have simply what I call the kind of the cherry on top kind of kind of trades. So yeah, so what we'll look for here then is, let's kind of see how this sets up. I do look at the possibility of a debit spread here into the close as well, as we get a little closer, possibly an iron fly. Yeah, so if you do ES, yeah, you definitely want to take into account that the S&P, the ES is trading at 15 points higher right now than the SPX. Yeah, and it may be something where the ES closes at 37.50, and the SPX closes at 37.35. Usually the SPX drives it though. So my main point with all this, and trust me in that in that I've looked at a lot of different ways to trade the close. I like trading futures. I like being aggressive, but the close is anything can happen. The first part of the day is what I would simply call a little bit more orderly, and in the close, you don't really want to take big risks. It's just not worth it. Again, because remember, what is our job here? It's not to be right. It's to make the cash and keep the cash. So, again, I just want to reiterate here, it's very rare when we're up 2% on the day or down 2%, honestly. So, but what I've found is that no matter, whether it's, whether we have a day where we're up or down 0.25% or 2%, the goal is still the same, and let's get that 2 to 5% is what I call that NLV. If you're cranking that every day, your annual returns are like off the charts. So it's not about a big trade. It's about consistency. It's about cash management. Now, when this was the other day, was this yesterday already? This is a perfect trade where it's like we're coming down. You can see we're clearly 1% away from that 21. We're getting green dots. We're getting arrows all over the place. Awesome. Let's sell some put credit spreads. Boom. We go back there, right? That's great. I was truly hoping that that's what was going to happen here. And, the market has been saying so strong that it's just not. And, and that's fine. Yeah, okay. So yeah, good question on that. So if we look at here, let me I'm gonna scrunch this chart here so you can see right now where that's kind of off screen. So if you want to scrunch everything so you can kind of see where it is, just go over to the price axis, hit fit study markers, and then hit apply. And then normally it's like sometimes to me that's kind of too compressed. But I kind of like this idea where, here's 37.75 to the upside, okay, and 3,600 to the downside. Now, keep in mind, this is 3 standard deviations away on the hourly chart. The odds of us blowing through this to the upside and blowing through to the downside are very low, even if tomorrow is a strong day. And so one trade I do like to do is around this time of the day, I'm completely fine, like say, selling an iron condor for the next day's expiration outside of those bands. Now, it's not necessarily, I wouldn't call it a big money maker, but we can see what it looks like here. But that takes advantage, and usually after a big day, especially after a big day like that, and we're right in the middle of those bands, there's not, a lot of times the next day is pretty quiet. So if I came over here and just said, okay, I want to sell, an iron condor, and I could look at it for Friday too. But what we're looking at here is on the upper band, 37.75. So come all the way up here to 37.75. Oh, that's true, Robert. Yeah, good point. So 37.75. 3775, 3800. That might be too wide, honestly, for this account. But and then on the lower end, 3600. Although those 3600s may have died, but let's see. So 3600 and then 30, and I like doing these, especially after a big up day too, because or even a big down day, because typically you're going to get some breath catching the next day. Okay, so on something like this, you're looking at like say, a 475 credit, and you're going to see that the risk reward ratio is not necessarily attractive, okay, because you're risking $2,000 to make 475, right? So a couple ways to fix that, of course, is we can tighten this up a little bit. I set it up as $25 wide, which is what I'd do on my large account. So we could say, okay, let's do $10 wide. Uh, 35, 90. And that's about $1.65 credit. So it's not great, but the odds of it expiring worthless, are pretty good. Oh, you know what? I messed this side up. So again, it's just kind of a way to play the nuances of the market. But okay, so 37.75, 37.85. Okay, and then boom. So it's pretty wide. It's outside of the expected moves. The odds of it working are high. But again, it's not what I would just simply call a huge moneymaker. So if we did this one on a per contract basis, we're risking 760 to make 240. A lot of times these actually will expire worthless, or you can get it, you could get it at a more like an 80% of max profit. And then I would also manage this with you guys tomorrow. But let's see if we can get this at 250. So I'm just going to place an order for 250, and that way you guys can see how that one works. Yes, you're supposed to do this for the next day. The plan is to capture overnight decay. Uh, 60-minute 3.0. Portion of, if you don't want to. Well, so that's a good question. So would you do a put credit spread for tomorrow? And my honest answer to that question is a year ago, yes. Now I'm just going to wait till tomorrow, because we could do a put credit spread for tomorrow. And if we have a big gap down, we just ruined our day. If we have a gap up, we make money. Guess what, though? We're going to get a signal in the morning, which is much safer. And so that's one thing I found. I used to put on futures and hold them overnight and kind of hope for the best. And I just don't do that anymore. Well, and that's the thing. So the whole point of this too. So if I were a guessing man, what do we think? I think we're rallying into October is what I think is going to happen. But that doesn't mean we're going to go straight up. I think that this market is at peak panic. If we look at You know, if we look at the S&Ps here, you know, we're at -3 ATR. You can see the last time we hung out here, what did we do? We rallied all the way back to the mean. The mean is like 3,900. You know, that's a long ways away from where we are, and you know, so I think that's where we're going. Now, do you see me placing a big bet? Um, you know, a big bet, you know, right now going like, yes, that's where we're going. Let's get in, guys. And the answer to that is no, because I can just catch pieces of that every day. I don't need the overnight risk in case, you know, Russia fires off a nuclear bomb or something like that. So so anyway, just kind of again, I'm just reemphasizing that point is that we don't have to take a lot of risk to generate this cash, especially on an overnight basis. All right, ticks here ramping up. So the other question here then, is there another potential trade to do here? So that's the S&Ps, right? S&P futures and SPX are a little different. So SPX, we're at 37.26, new highs on the day. You know, are we going to get it? You know, what's nice about our butterfly too is if we pin at 37.50, that's when we get max profit. But if we can close above, any close above 37.41 is going to be profitable. You know, you just let it cash settle if we can get there. I mean, we've got 30 minutes left, and you know, we may or may not get it. All right, I just got the iron condor, so I'm filled on that. Notice that is tomorrow's expiration, and in a perfect world, you know, we would just get out. You know, we could let one side expire worthless because it's so far out of the money tomorrow, and maybe get out of the side for a quarter. I can post the exits in this room. Yeah, so would you be doing these trades on a Friday with quarter end options? So again, the first 2 hours of the day are pretty clean. It's the last hour of the day that's a utter shit show. And again, that's why we trade a little differently in the last hour. You can see here that we've got, you know, this larger time frame. We're just getting more and more, you know, that 8 EMA at 37.50 on SPX. You know, we'll certainly likely test that tomorrow. Let's see here. Just, you know, great action. So now the question though is we do get into the last half hour, you know, is there another trade that we could do here? Because we've got what I would call the cheap butterfly. And look, this really the only thing to do with this is let it cash settle. Maybe if it pops up to $3, if you want to try to get out, you can. But you know, we got it for 75 cents. So any close at 37.41 or higher, you know, up to 37.50 will make us money. Any close between 37.41 and 37.59 will be profitable. So it's kind of a nice range, but we got to get up there, right? We're 26 points away. We certainly could do it, but it's got to do it pretty quick. So I like that because it's cheap, you know, and then the overnight trade here is really to benefit from any overnight premium decay. A lot of times too, this combination, and I'll take a screenshot of this. We're buying this, you know, 2 lots for 75 cents, and then we're selling this here. What I've found is that on days where this doesn't work, then this iron condor the next day pays for it. So that's kind of a way to fund it. But I want you to just, again, the main thing I'm emphasizing here is that, you know, yeah, I would love to be long 700 futures contracts here, but you know, that's an ego trade, right? I'm here to make an amount of cash every day, and the butterfly looks like it may work. I didn't get the butterfly on here. Yeah, what a great, you know, and just imagine that there are people out there right now that, you know, they've been heavily short, and it's like, oh my God, they're screaming, and the goal here is not to ever get in, you know, we don't need to get into that situation. Yeah, I'll put in exit. So let's work some exit orders here. So the butterfly, you know, typically with the butterfly, if we get close, we just let it cash settle. You kind of roll the dice because it's hard to exit, frankly. I mean, you could exit here and scratch it, but you know, why? So, you know, just you position size it where you're willing to take the risk. And then for the iron condor, I'll just put an order to buy it back at 80% of max profit. And so, if we get our handy dandy calculator out, and you just go 250 times 0.2, it's 50 cents. Now you find sometimes it may not close because, like if the put side expires. So, if we are up tomorrow and we're well away from the put side, you could just let that side expire. But that's the order would be to get out at 50 cents. Oops. And then since this is going to be overnight, just be sure to have this as good till cancel. Yeah, so Maddie, good question. On really strong days, would you consider selling pullbacks to the 8? The answer is yes, but it's hard to tell. Like, what do you call a really strong day? It's always good. It's always, in hindsight, it's always obvious, right? So that's the only thing, my only cautionary tale there is, in hindsight, everything looks, pretty easy, right? But you'll notice here, if you look at this, it's that those big turns always happen at the 21. So the 8, look, here it hits the 8 and it just keeps going. But at the 21, it stops dead in its track. So just kind of keep that in mind. This in hindsight, this looks super easy. And I'm all about like, hey, let's be aggressive and make some money. But I've found I'd rather take kind of the easy trade with bigger size, and then if that makes sense, because tomorrow, the odds of us being up 2.26% tomorrow are pretty low. Yeah, the 8 crosses the 21. So what do you want to do when the 8 crosses the 21? You want to buy that pullback to the 21, but we haven't gotten it. But yeah, it's look, the market today has been remarkably strong, and on a strong on a strong trend day, do we hold the 15 EMA? Yes. But what quantifies a strong trend day? And I think that's the tricky thing. At the very least, we could say on something like this, as you're watching the rotations, you can see that they're all turning lower here, right? And then at some point they do turn higher, and you could say, okay, yeah, I'm going to use that as a buy signal in that in that kind of a situation. Yeah, so I always kind of what I always like to try to do is make the trading rules as easy as possible. So, if there's a situation like, hey, if you are clear on what a strong trend day means, like if you know how to read the internals and stuff like that, then yeah, you can you can see all the different things you could do with this, right? But I like to set it up, and again, I go back to James, it's going like, okay, if he doesn't understand what a clear trend day is, what does he do? What would be the hesitation in trying a long call? It just goes back to the idea of why would you ever want to buy a long call when you could sell a put credit spread? Again, if your main goal is cash management. That's the realization I'm coming to. And you guys know, I mean, I like buying calls, but if you're going to buy a call, it needs to be 30 days out. The only exception I would make is towards the end of the day if there's like a cheap call debit spread or something like that. Yeah, no, and Rick, that's a great question. It is a great question. I've just been, as I've been playing around with this, instead, if I would normally buy 10 calls, I would rather sell 30 put credit spreads. You're going to make, basically, even within an expected move, you're going to make the same amount of money. And with the put credit spreads, you could still make that money even if the market traded sideways. It's just that when you go, like if we bought a long call here, we're at the mercy of the market makers. Yeah, let me show you what, and while we're sitting here too, because if initially you're kind of trying to get your arms wrapped around this, and it's like, wow, that's a lot of squiggly lines. This is how James set it up. So I'm gonna show you exactly what he looked at. So this trend rotation, he didn't look at all the wiggly lines. He's like, I don't understand what they're doing. It's like, okay, so let's just uncheck that. And he wasn't a fan of the dots. He's like, I don't know what the dots. I don't get the dots. Like, okay, so I'm just gonna set the turn threshold to like 100. So they just basically you won't ever get any. you know, as Eric was saying, if you put it on 0, you'll catch every turn. So I'll put it at 100. And then for moving averages, he didn't want to watch a bunch of moving averages, so he just watched the 21. Do is, like you said, it's clean, and then kind of add things back. So let me make sure I got this correct here. What is not happening here? The line colors. What did I do wrong there? Color price, yes. Oh, okay. So I need to probably go down to. Oh, yeah. Well, I could uncheck show plot on all these, right? But let's keep this simple. So I'm just going to minimize this a little bit. So what he would do, yeah, I'm happy to share this, and I'll tweak it here so it's there. So he just didn't like that. So literally, what he would do is just watch and say like, okay, you know, he'd say like, okay, like right here, we're 1% away from the 21. You know, I'm going to buy the stock, and it hits my target, and I'm done. And that's it. So that's kind of what that's what he would do. And as he started to watch it, he would kind of add other things too. And again, remember, this is just a very, very strong day, right? This is a little more atypical. You know, more typical action is kind of like, you know, it's like, okay, here we're swooning down, you know, we take it back, and then we're swooning up, and then we come back. That's more typical. So if you look at it like that, it's kind of clean. You know, it's just a little bit cleaner. Okay. Wow, we're just grinding here. So I do want to see, you know, is there a possibility here of a one more spread? We got about 15 minutes. Man, I wish if we're at 37.40 here, I would do an in the money put credit spread here. But it's still a little ways away. So again, there's no need to push it, you know. There's no need to push it. Mhm. Why didn't we show? So remember, I don't do trades between about 11:30 and 1:30 Central. Like I just don't trade during that time. Wow, crazy strength here. 30. Oh, there's just no premium. Man, I was gonna sell the 37.25s, but they're only $1. Like there's no premium on the put side here, which is a sign that the market wants to rally. The put call is going up. People are shorting this. They're getting destroyed. So it's pretty bullish. So when you see it, so again, little secret here. So when the market's rallying and the put call is going up, that's very bullish. It just means that people are shorting it. And you know, again, keep in mind that you know the general public is generally wrong. So you know, if you see um, so if price and put call are moving together, it reinforces the move. And if they're moving opposite, it's a heads up that the move is, you know, probably going to end soon. He was we played around with both, and him honestly he couldn't tell the difference. And we'll we'll let the market close here, and I'll construct the chart he was looking at and things like that too. Oh yeah, no, this move is the fascinating thing here is that this move is just destroying so many models today. The big thing here, of course, is that the dollar came down, right? Bonds are honestly probably a good long-term trade here would be to buy calls on TLT. I mean, I think this is just putting in a hard bottom. That's an island reversal. So the idea that we're gonna rally like a bat out of hell here makes sense on TLT. Yeah, so if you do have S&P futures, keep in mind that expired today and you did the butterfly on that, you do need to close it before 3 o'clock. So 3 o'clock Central. If you do have any in the money option, if they're out of the money, don't worry about it. But if they're in the money at 3, you'll be assigned on any leg that's in the money. 37.32. We've got 15 minutes left. How many monitors? So I do believe that one is not enough. I used to have 8. That's too many. I gravitated towards 6, but honestly, 2 of the monitors I don't use for trading. I just use so I can have email up and things like that. So I would say 3 to 4 monitors is good. Little drama into the close here. Yeah, so I've got like these Dell, I think they're 27-inch monitors. You can even get them on Amazon. They are, I think they're like $200 a piece or something like that. Your 2011 Mac. That's awesome. Now, I use Windows PCs, but only because that's kind of what I grew up on. Henry, I believe his desktop is Windows, but he actually likes his Mac setup too. Obviously, Thinkorswim and Tastyworks are both fine on a Mac. Yeah, okay. Well, so one thing on TOS too, remember that you can allocate more RAM to TOS in the TOS settings. And 32 megabytes isn't bad. Just be careful how many charts you have open. There's some charts that actually suck up a lot of resources. So that's the thing what I've had to find too. Yeah, if you do have, so one thing on TOS is that it is very intensive if you have a lot of charts open. So one thing that we've done before is we'll open up Thinkorswim twice. So we'll have one instance where it's got all of the different tools and stuff, the charts, and then another instance where it's just the trade execution. So then the instance that you have that just has your execution is fast, and then the one with the charts is slow. And sometimes or you could even have it on a laptop just so you could do the execution. I mean, it's kind of weird, but that's the workaround. Yeah, so we got 12 minutes left, so we're kind of leaving it to fate here. So for the butterfly, the nice thing with SPX is you can let it cash settle. So if we can rally another 7 points, we're in the money on our butterfly, and then obviously if we could pin at 37.50, that'd be great. So I tend to let it cash settle, and that either means that it's going to be amazing if we close right at 37.50, and it's like, oh my God, or it's going to suck if we get to like 37.42 and then drop. So the main rule of thumb in butterflies is that if it goes to 0, it's not a big deal. And if you want to try to exit, you can. It's hard though. Like butterflies are kind of hard to get out of towards the end of the day, but the tick's at great. So we're 6 points away from being profitable in this trade and 14 points away from max profit. Yeah, so ES does not cash settle. So good question. So if you did the ES, you'll need to close it in, you'll want to close it for sure. And you don't have to close out, you know, on the ES2, just so you know, you can just close out the in the money sold strikes. So sometimes like the out of the money strikes, you know, they might not be worth anything. I mean, I don't have the ES one on here, but you know, sometimes in a butterfly, you know, so the butterfly right now, so you can see we got a little bit of a profit in it, and it's just like, man, if we can get to over 37.41, anything above that is cash in our pocket. So right now, you know, we got that premium, but you know, like right now, if we were going to try to close out this whole thing, I don't know if we could because this thing is 2 cents. It may not even be trading. So sometimes what we, you know, you can do is just you close out. You know, if you got the S and P's, and you know, you know, as we get to the close, and it's just like, well, you could just buy back the short strike or the in the money call, you know, that kind of stuff. So it's a little tricky. 37.32. Oh man, we had some good action going. Yeah, let's go over that. So just so you guys know, when the market closes here in 10 minutes, we're going to stick around for a little bit because I want to wrap up some trading stuff with you, and of course we're going to have another live trading day together. But things like, you know, what do you do? You know, what do you look for when to get out of a trade? You know, stuff like that. Now remember, we got the iron condor at 250. It's against us right now, which is fine. So you can actually get in a better price than we did. The exit, we're working overnight. All right, we were at 37.30. Where is the sucker going to close? All right, I'm going to try. I want to do this where I can see the ticks. So I got the ticks here too. So this is not what we want to see. We don't want to see negative ticks here. But you know, again, the last 10 minutes, it's kind of a rodeo. Doctor, yeah, no, that's great. I mean, I think the most important thing to understand here, and look, today was this huge day in the S&Ps, um, but I really don't care if we're up 2% or we're, you know, down 0.5%. My goal actually on each of those days is the same, and I just can't explain how calming that is. You know, if you start to build up the confidence of going like, well, I just want to generate, I say 1 to 5% a day. You know, I try to, I try to kind of zone in on that 3% ish, 2 to 3% seems pretty solid. And then, you know, maybe, but there's some days where, you know, you're hitting 5% and stuff like that. But most of it's happening before noon, and it's happening with credit spreads. Um, you know, so sometimes I might have, like I say, I'm up 3.5%, and then, you know, get a nice little butterfly at the end of the day, and that's the cherry on top where I wasn't risking that much, but it nailed it. And that's the biggest thing is just kind of, you know, getting out of that pressure of, oh my God, I'm a trader, I should be catching this. That's ego, and that's destruction, capital destruction. Yeah, no, good stuff. Well, let's see where we close here, and then we'll, I want to update the trade we did today. We'll talk about the markets, what to expect tomorrow, the iron condor. You can see the SPX, we're bumping up against that, you know, this moving average here too. Let's see what we can do here in the last 7 minutes. So my plan for the butterfly, I'm just letting it cash settle. So I don't have an exit order on it. I'm going to let it cash settle. You can do with it, do what you want with it. I mean, frankly, if we were going to be pinning at 37.50, we should be closer to 37.40 right now. So, you know, we are certainly a little bit of ways from it. You know, there's not like a right or wrong way to do it. It's just that the point of the butterfly is let's throw in a cheap trade and see where we close. And then if it doesn't work, that's fine. And if it does work, that's great. And all we need to be profitable on that trade is a close above 37.41 with max profit at 37.50. And again, if we were at 37.40 right now, I'd feel much better about the trade. But I'm not concerned about it because it's not like it's like, oh my God, this doesn't work. I'm going to lose all the profits we made today. No, it's only, it's a schmidge. Yeah, it looks like ES may drive it, may drive the 3750. So good question. So for cash settled options, and that just means that options that expire today on the SPX, it takes place at 4 o'clock Eastern, 3 o'clock Central. So options that expire tomorrow, they will consider the continue trading for another 15 minutes. Yes. Thank you. All right, let's see where we end up here. And you can see what I mean here. Like the last 10 minutes or so, it's just like hedges being taken on and off, and there's all kinds of things happening that have nothing to do with what I would call normal markets. Falling, falling, falling. Yeah, you can see this is a mess. The last to me, the only sane way to trade this would be with a cheap butterfly, and then if you nail it, you're making 10 to 20x, and if you don't, you barely notice. All right, 37.27. Ticks are a little heavy. Hmm. The other Brent. There's a lot of Brents, right? No, it's awesome. Butterflies, it typically will do around big round numbers. So 3,700, 3,725, 3,750. And it's that's you just kind of look at they tend to be kind of magnets, but also it lined up with the 8 EMA on the daily. So I want to see something that's near one of those, the 5, 8, or 21 EMA on the daily. All right, let's just let this market close, and we're obviously not going to get that 3750 pin. It looked good there for a minute. Okay, let's see what is happening here. Ooh, a little nasty to the close. This is good for our iron condor. It looks like they're going to pin it at 37.25. All right, we got about a minute left here. Just kind of see where things end up. Why not close the iron condor for tomorrow? You can if you want to, but the real action, the real premium decay happens overnight. So this is what I mean. At the end of the day, this is the kind of crap that happens, and it's like, does it pop up? Does it come back? And if we would have done like let's say a put credit spread at 37.30, 37.25, it would have been 100% loss, a max loss, and there's nothing you could have done about it. So that's why I don't do those at this time of the day, because there's there's zero forgiveness. Okay, so then let's come back over here to our butterfly. So butterfly, max loss, okay, we lost 150 bucks. On the iron condor, we made about $70, so we've already recovered some of this. And then tomorrow, we closed at 37.18. As long as tomorrow by around noon, if we're comfortably between 37.35 on the upside, which is a long ways away, and 3,600 on the downside, we should be able to close this out for about 80% of max profit, which is 50 cents. Now, sometimes what will happen is, let's say that tomorrow at noon we're at 37.35. This side may be worthless, and you won't even be able to close it out. And that's fine. You can just, a lot of times in that situation, what you do is just close out the short side, for like 2 cents. The long side, there may be no market for it. But tomorrow we're not going to be in here tomorrow. Like, the live trading is closed tomorrow. But for exits, I'll post them. All right. Now the butterfly, there's nothing to do here. We bought it for 75 cents. It's worthless. At one point it was worth about $1.50, but to me, the point of the trade isn't necessarily for that. That's why this is a smaller trade. We got the iron condor that's already offset some of the loss and should offset the rest of it tomorrow and a little bit more. So what's nice about this is when it works, if for some reason we would have pinned at 37.50 today, it'd have been like, wow, we risked 150 bucks and we made 1,800, right? And that's great. But then if it doesn't work, it's not, we still made nice cash today, almost 2%. So that's all I'm looking for. And there we go. Yeah, okay, so good question. So I think there's some confusion about time of day. So the only time I'm doing the trades where we're 1% away or anything like that is from the open to about noon. I am absolutely not interested in those trades here. So I see that's a question that's come up. So let me make sure I'm clarifying that. Okay, I generally take 1 to 2 trades between 8:30 and 11 a.m. Central. Okay. Snap and continuation. After about 11:30 Central, I am mostly done for the day and am just looking at cheap, low-risk trades into the close. Okay. Why? Because if I'm wrong after 12 noon, the premium structure is such that I'll get killed. That makes sense? So after 12 noon, I don't care. Oh my God, we're 1% away. Should I sell call credits? I don't care. Now, if it's a day, again, these are guidelines, right? if I've already made 2% on the day, I'm absolutely not going to risk something like that at the end of the day. Now, what would be an exception is it, something, again, an exception would be like what we did today, where if I'm wrong, it's not going to really make a dent, but if I'm right, it's going to add to the pile for the day. So the advantage of this structurally, the advantage of the setup that I'm telling you about is structurally there's an advantage between, if I'm getting this correct, about right here. After that, there's not a so yeah, right here, yeah. Oh my gosh, we should have bought puts here and wrote it all the way down. Yep, stuff like this looks great in hindsight. But at the end of the day, it can go either way. So if you are comfortable trading the last 30 minutes directionally and it's working for you, I mean, by all means, keep doing it. I'm just finding that it's like I'm really getting into the idea of let's just make the easy cash and in a low stress way. So anyway, hopefully that makes sense. So you can do it, I just don't. Let's see. Oh, let me, you know what? Let me post the order to exit. This is the exit order for the iron condor. Yeah. So how did we manage that trade this morning? So yeah, basically So again, directional trades are going to be harder to manage than spreads, but the get out of the other stuff too. But you can use things like, oh, here's, as long as this, as long as we're riding this higher, great. Here's kind of a target. But I'm telling you, directional is harder. But the guideline you could use is that, if your credit spread hits 40% of max profit, you could take off your directional. Yeah, mastering the easy trade. So I'll put together some more kind of guidelines for directional trades, but I'm just, I'm going to be blunt and tell you I'm not doing them. I just, and I use that as a guide. I mean, are there exceptions to every rule? Yes. But the more and more I'm just finding that it's like, my easiest days are when I just follow the exact kind of trades that we did this morning. Let's see. Yeah. So if we're looking at it, so this is the trend rotation regular, right? So, what is on here? So the trend rotation, it's set at 3 and 10. You got the 15 period moving, the 15-minute. You have the 8 EMA from the 15-minute chart, the 50 EMA from the hourly chart, the 21 EMA from the 30-minute chart, and then the 5 EMA from the daily chart. The Kellner channels I have setting at 21 and 3.0. And I have this on here, the ATR modified trailing stop. I don't have it turned on. Some people like this. So so actually this answers the directional question. Now I remember why I had that on there. So if you're doing a directional trade, you can stay long the trade as long, in this case, as there's blue dots. And you can see basically there was blue dots all day long. Okay. Most of the time what happens would be something like this, where let's say you're long, you just can stay long, but once you see pink dots, it means you should no longer be long. So that's kind of a guideline as well. Again, directional trading is harder. Okay, so that was that, and then Killer channels, and then we got the percents from the moving averages, and then all that kind of stuff. So that's kind of the what's on there. And I have that on, basically every chart. It's just that here, the rotations are going to be higher time frames, and the moving averages and the Keltner channels are higher time frames. Yeah, so for those of you that are in Florida, you guys are starting to get hit by the hurricane. Yeah, well, good luck. I know those were kind of hairy. Yeah, and so for the higher time frame, the way I got it set up, I did share this link. Studies, edit study. So, we got the 21 EMA daily, 8 daily, 5 EMA daily, and then of course I've got it at 30-minute, 1 hour, 2 hour, 4 hour daily on 2 days. And, again, if you wanted to have the trailing stop feature in place, it's kind of a visual. If you're directionally, it it gets a little confusing because now there's a lot of dots. But basically, if you're short and there's blue dots, you're wrong. So that's what it's kind of useful for if you need that additional kind of visual. I don't think it's as useful on a larger time frame like that. I think it's interesting, like on a fight. This actually was a nice, clean way to stay long all day today. Although that's not, I'm not interested in staying long all day today. But again, the S&Ps are up 2% today. That doesn't happen very much. So it was good that we got to see today, but also good to kind of see what we focused on, but what we didn't focus on. So like on equities, I have unchecked show extended hours, and I do have start at market open. Futures are obviously 24 hours almost, but for cash session, SPX, Tesla, I'm just watching that. So if we looked at something like Tesla today, same idea. And this frankly is what, James wasn't looking at, doing options or anything. So let me find this one chart. So the way he would look at it would be, it's like, okay, here's Tesla. And, a chart for him would be like, oh, geez, we're back at the 21 EMA. Let's buy it. Or, we're down here minus 1%. Let's buy it. And then if he was going to short it, this would be like something like this. You gap up, you get a sell arrow, and then he's going to, sell it back to the 21 EMA. And, he was fine doing that too. So that's kind of nice. Again, that's a way to kind of look at it where this is essentially, what inspired all this. And then what I ended up doing was just kind of adding, these were always here. I like these. I want to look at them. He didn't like them. It's like, oh, that's too hard. And I think what we even did is, so you can go through here. I'll show you what I did with him. You can go through and turn all these off. So that you can still use the bars. So I still want to use this. I'm going to show the study, but I don't want to see value 0. I don't want to see value 1. I don't want to see value 2. I don't want to see value 3. I don't want to see value 4. I don't want to see value 5, and I don't want to see the 0 line. And then if I do that, you can see that this is just blank, but I can just kind of minimize it. And that's what you get. So that's in a nutshell, the simplest version of this is like, oh, if we're too far away from the 21, if we get that 1% threshold from the 21, great. Let's short it back to the 21. And then, and he was almost always doing reversion to the mean trades. But then if you had a move like this where you kind of came back, then yeah, he'd buy it. Oh, very nice. Yeah, so I do look at the squeeze. So yeah, so I'm not honestly concerned about the squeeze so much on a 5-minute chart. Obviously, I'm a huge fan of the squeeze. So what I do though is I look at it on, I will keep an eye on it. Like, what's the squeeze doing on a 30-minute chart? So we can see that today, that was Tesla. If we wanted to throw a squeeze on here, you absolutely can. And of course, I love the squeeze. I want to try to keep this also as simple as possible. So if I added the squeeze pro here, and then let's go back to like the S&Ps. And then you can see like, okay, well, today towards the end of the day, there's a little squeeze that popped up here. There's the sell signals. We kind of came back. You can see we're kind of running out of momentum here. So, certainly that's something to look at, if you've got the squeeze and kind of wanted to add it on there. But again, I'm not so interested in the 5-minute signals. Yeah, sometimes there'll be some good ones. But I am interested on 30 minutes and above. And that's normal. I mean, normally for me, yeah, I do want to know what's happening on a 30-minute chart because these can be pretty powerful. But, 5-minute, it's kind of like, oh, okay, we're here. And, this actually was a nice little 5-minute kind of a squeeze combo into the close and stuff like that. So you can certainly, if that's a tool that you got in your arsenal, you can certainly, use it, of course. Percent from daily. So those are indicators that we have included in this. And, once you upload them, they'll be on there. Yeah. Okay. So great question, Tony. So yeah. So you've always used the 10. So is it okay to substitute for the 10 to the 8? And the answer is absolutely yes. So yeah, there's no problem with that at all. When I kind of gravitated to the 8 and the 21 and all that kind of stuff. But if you like the 10 and the 20, that's totally fine. And and if you want to use simple instead of EMA, it's certainly not a not I don't it's not going to impact how it works or anything like that. The settings for the TTM squeeze on the 30-minute, they're just the default settings. Yeah, I don't change anything in the settings. Yeah, so for deltas, I'm generally selling delta 55s. And then, from there, again, it's really more based on account size. So if I'm doing, typically an account that's the $50,000 account, I'm doing $10 wide spreads. So the main thing though is I'm selling the delta 55-ish, which is slightly in the money. And then I just go $10 wide. Same selling the delta 55-ish in the larger account, but then I'm doing $25 wide. So I'm not so much like, oh, delta 55, delta 25. I'm just like, okay, I'm going to sell the delta 55, which is again, is just slightly in the money. And then I'm either going to go $10 wide or $25 wide, depending. And it's okay, can you go $15 wide? Could you go $30 wide? The answer is yes. It's just guidelines. Yeah, so for me, the after hours on equities is absolutely worthless. So I don't want to see it. I don't want to know about it. And I just turn it off. But I will look at it on the S&P futures because that's pretty active. And again, that's just my preference. I personally think that the after hours action, it's low volume, it's low impact, and if anything, it just messes up the tools. What's the problem with wider spreads, say 50 wide? Not a lot, honestly. I've done $100 wide spreads on the NDX. The trickiest thing is when they get wider, is that you have less cushion if you're wrong. So the $10 wide to $25 wide is a good sweet spot on the SPX if you're wrong in the first 3 hours of the day. you got some cushion because they're not, the premiums aren't falling apart. Let's say you go $100 wide, you're basically, it's like a naked, you're almost naked. And so if there's a big move against you, you're gonna feel that in the spread. So I like wide spreads, but I would certainly, instead of doing a $5, instead of doing 25, if I'm getting the math right on this, instead of doing 25 $5 wide spreads, I'd much rather do five $25 wide spreads, and that's about the same risk reward ratio. But I'd rather do, four $25 wide spreads than one $100 wide spread. And the main reason is simply because if I am, some big fast move against me, it's going to hurt more on that. But the short answer is there's not a big difference. It's not a huge thing, especially in the first part of the day, but that's the reason. Yeah, so I'm not completely positive of Cody's 0 DTE plan. So is it? I think does he sell like really far out of the money wide spreads, and they're really far out of the money. Yeah. Okay. So all right. So I actually like the idea. The reason I don't do them is that they take up a lot of buying power, and it's not a huge impact on my net liquidating value. So I'm looking for, I want to sell the spread, and when I close it, I want to make 2% of my net liquidating value. So I could do that with what he's doing. I would just have to put on an absurdly large position. I think I might be wrong on that. But the answer is to that is could you use what Cody's talking about for additional income with these tools? The answer is yes. I'm purposely going in the money to get a fatter credit to hit my NLV targets, and so that's why I do it that way. That being said, I kind of like the idea of combining Cody's thing where I do, I'm going to do this fat one that's in the money, and I'm going to do this one that's really further out, to capture $1 or whatever it is on it. Yeah. Okay. So so you can absolutely do both together. Yeah. 20 delta, 50 wide. Okay. Yeah. Okay. No. Okay. I see now. That makes sense. Yeah. Yeah, and so one of the great things too is that you'll find things like what Cody does or Roggy does or what Henry does or like what I do, and you'll find things where it's like, man, I really like the setup that John's using. I'm going to go ahead and combine that with what Cody's doing. Okay, and I love that kind of stuff. That's great. So rotation squeeze versus rotation regular. So again, they're all similar. Rotation squeeze is smoother. Rotation, regular, the standard deviation regular is it just going to have faster signals. So I kind of look at both. The winning percentage on this it's been pretty high. It's been, typically I've been tracking my days and I've had 80% winning days. And then on the down days, I'm kind of careful. So if my first trade of the day doesn't work, I try to really be careful the rest of the day. Like I would rather have a small losing day than, it's like I keep trying to dig my way out of a hole or something like that. Yeah, it seems like the trades are actually they've been higher than 75% because of the fact of the nature of the spreads. There's trades where I've done a spread and a directional trade side by side, and I lost money on the directional trade and still made money on the spread. And that's why I keep hammering the spreads. And look, when all I did was directional trades, I was like, spreads. But what really changed my mind is I've always liked trading spreads on Fridays, which is expiration day because of the fast decay. And it's like, oh my God, you can do that every day on the SPX. and the tax benefits are a lot better, and you just focus on the indexes instead of trying to, look through 100 charts. And does it mean that I'm not going to do like swing trades on stocks anymore? No. It's just that this is kind of like, okay, for this account, I'm doing cash flow. Yeah, so remember stop loss. Okay, so stop loss question. This is really a function of, um, it's really a function of the chart and what it's telling you. Okay, so I'm going to show you. I'm trying to remember. There was a trade here from a couple last week that did not work, and I'm going to show you. I'm trying to find where I got out of it. So that one, no. Oh, you know what? It was FOMC day. God, what day was that? Was it that one? I don't remember exactly what it was, but this is similar. So I got into the trade. So we came up here, we came down. Again, this isn't exactly what it was, but it's close enough. And so I got here, I did the put credit spread, then we kind of came down a little bit, again, not enough. When you only go down 10 points, you barely even notice it. And then we're kind of coming up again. And then I found like at this point, when you take out that low here, okay, so this trade didn't work. So I did the spread at, whatever it was. I think I lost $3 on the spread. And, even though it went like 25 points against me, I only lost $3 on the spread. But at that point, it's like, looking back on it, and again, this wasn't exactly the trade. It was similar to this. But the nice thing with a spread like this is you can kind of wait for it to pan out. And, ultimately it's like, so it's just, things like that where now had I done that directionally, then, it's like, oh my God, I just lost 30 points in the S&Ps. So I'll see if I can find it, but that was, I remember that. I think it was on FOMC day I did one, and it just whipsawed me, and that was my own fault because I shouldn't have done that trade on FOMC day. I'm gonna find it. Is it here? Anyway. Yeah, maybe I'm looking at the wrong. Anyway, um, but we have another live trading day together too, and we'll continue obviously to kind of look at that. But I'd say some of the main kind of ahas here too. And this is why I like these moving averages. Look, this 50 EMA did stop it right in its tracks. So it's like, okay, that in the on the daily chart, we pushed through. We did push through that 5. And it's kind of like, oh gosh, let's see if we can get to the 8 EMA. But then, the hourly kind of stopped it, and yada yada yada. But I mean, this is, again, today was an interesting day, and it just got tighter and tighter and tighter and tighter, and just got a little bit of a pop there in the close. So let me do this. I am going to, because I've seen some of the questions here, so I'm going to go through. I'm going to update the slides from today. I'm also going to continue to add notes based on some of the questions that I'm seeing, and then I'll have this updated one uploaded uploaded to your room, the area where you get everything, and then look it over, and then I'm going to continue to grab examples from this week. I'll be in the gold room. That's where I post trades and stuff like that too. And then yeah, just kind of digest it and just kind of see what questions you have. The biggest thing with this too is just remember the biggest challenge that I see traders have is they feel like they've got to overtrade and they make things too complicated. And so I'm deliberately trying to do the opposite here. It's like, okay, this is simple and I'm going to undertrade, and can I still make my goals by doing that? So a lot of times what I'm seeing in the markets, it's like, what about this? What about this? I'm like, I don't care. I don't care. And so and that's deliberate on my part with this, because it's just like, wow, this is really more interesting and simple if we just focus on high probability ways to make cash. Nice, nice. Yeah. So the idea here is that let me see again. I'm gonna try to find this one trade. Oh, this is Tesla. Yeah, I mean, this is a good example. So let's say right here you went long. You got two arrows. You go long, and you get like four red arrows against you. There's no reason to be long anymore at that point. So, if you're right, you're not going to get that many arrows against you. So here you go long, okay, and you don't get any arrows against you. So the arrows are just kind of good, telling you like, hey, heads up, here you get some arrows, and great, you get a nice pop. It moves like 7 points, and then if you're still in and you get these arrows, a lot of times, if I get 1% above, I'll use that as an exit as well. And then at that point out, so yeah, the arrows are very good guidelines there. Now remember, when you're doing spreads, they're more forgiving. Here we came down, you get the arrow. Oh, let's get out here when there's a down arrow. So, and again, with spreads, it's nice. They're, because you are going to get some back and forth, especially against the moving averages. And, again, this is just it's a pretty clean setup. And so for Tesla, for the where did we end up here on the SPX? Yeah, so on SPX, we got to test, 3690 at some point tomorrow. It's not that far away. And then if we look at this 5-minute chart, this morning we did the put credit spread. We did the put credit spread here, I think, or right around here. I think we did it here with the up arrow. Went against us, and then we hit our profit. And then, from here, we just never got the pullback to the 21. Now, in hindsight, we say, oh, well, what about the pullback to the 8, which happened right here? And like, yeah, that's great in hindsight. But if we're like, oh, I really, I'm either going to short it back to the 21. I saw a couple of questions like, well, there was an arrow and we were 1% away. Why didn't you do that? Because I am only interested in doing this between like 11:30 and 8:30 Central. That's kind of the sweet spot. After that, your opportunity to self-sabotage yourself increases exponentially, simply because how the markets are structured and how premium structured. So that's that's the money-making spot. If I can get two solid, and we only did one today, for the solid, the bigger trades. So if I can get two solid trades in, and hit my goal before 11:30, why would I ever come back to the markets? I'm gonna go do something else and then come back the next day. All right. All right, guys. Well, let me do this. Again, I see some questions where I think I can answer by I'm gonna grab some the screen grabs, and I'll do some labeling. I'm gonna add them to this PowerPoint. We'll upload it, and then sit with it. We got about a week or so before our next live trading together. Tomorrow we do have that working order on the iron condor. If if it does fill tomorrow early, I'll confirm. If for some reason I change I need to change it, we'll let you know. But the order's working. If we're, we could be plus or minus 1% tomorrow, and we're going to hit our target on iron condor. The only except, if we gap up or down 2%, then it could get a little interesting. Yeah, no, it can be a lot. Yeah, and I do wait for the closing bar. Again, it's different. If you're directional, you got to be more precise. If you've got spreads, you don't have to be so precise. And remember, the 1 minute is going to be all over the place. The 1 minute's purpose is to give you a heads up, like, oh, we're coming back to the 8 EMA. It looks like it's holding, that kind of stuff. And then this is kind of the, the chart where it's just like, okay, are we, again, I removed a lot of the stuff from this just to kind of show you what James was looking at. And, in its simplest form, it's kind of like, oh my God, we're falling. Here's the up arrows. That means everything's rotating higher. Great. In our case, we sell put credit spreads and we kind of ease our way back up, and we'll get our profit target, meaning 40% of the credit received. And so just remember, in its simplest form, It's just showing us like, hey, it's time, and you get stuff like this too. And if you sell a put credit spread here, guess what? You're making money during this. Yeah, you're getting down arrows, but price isn't breaking. So that's stuff too, or it's just kind of nuances you'll find. Chop. The thing about it is, when you're selling premium, chop is not a bad thing. If you're buying calls, chop is death. All right. So that's a part of why. The other thing is, like, I like the premium because if it's choppy, that's fine. That works. That also works to our advantage. All right, guys. Well, thanks, guys and gals, for joining me today.